Recording now. Almost forgot. So guys, for those of you who are not part of the Traders Academy Club, my name is Jordan and I'm one of the traders in the club. On Fridays we do open sessions and we cover pretty much the whole week. We make a summary, a review of all the setups we've been following and all the ideas, how those developed, and just transparency. That's the key word here in all that explanation. This is how our report looks like. Of course, this is sent throughout the week. It has educational materials. Those are videos here, webinars on the top. This is the watch list. This is probably the most important part after you learn the theory. This is where the magic happens, what we're following, and the ideas. Of course, at the bottom we have the comments. Now, for those of you, basically, what's the idea? We try to set directions, plus in some cases actual setups, trade ideas, and this is more into my part. Vladimir is more into the directions part, the longer term view. So we kind of fit perfectly the two parts, right? Actually, it's the yin and yang, one doing this, the other one doing that. But why I'm mentioning this, once you get the given direction for, I don't know, euro dollar, we're looking for sell or for buy or whatever we're looking for. This is where things become nice, because once you have the direction, you can apply literally any strategy which is going to fit inside this direction. That could be any of those strategies that we're using, and this is why I'm showing those. You can go ahead and find the trades you're taking. Those are for educational purposes, of course, but they're public, they're published. You have the screenshots, you can see where the entry is, and so on and so forth. Basically, it's quality material for you to see how we do it. Of course, you can use any of your strategies, whatever is your comfort zone. But the basic idea is you get the direction, and this is the least, and then you start from there. And of course, if you want, you can follow our principles and our methods, what we're teaching, if this is your comfort zone once again. So this is basically how we work in the JC. Apologies to those who are hearing that for the 50th time, but we always have new people, so we must say these things in order to more or less get everyone on the same page. Now, starting with the charts, guys. Before we move on, I just want to quickly go over a repo right here, and a very quick update. This is not part of the report, but in the past few days, it is trying to break below a very significant supportive zone. This is where a possible divergence started forming. It's not yet completed, meaning that it could simply drop lower. But for anyone who's into cryptos and investing, not trading, in my opinion, this is more or less a fantastic place to start looking for buys for the long run. Why? Because we have the spikes in the all-time high around 3+, and we're currently at 25 cents. So great risk-reward ratio, and Ripple is one of the leading cryptos, of course. Anyway, let's not get into details here, but that was something I wanted to mention before I forget. Now, the watch list, Aussie Kiwi. This is an idea which starts from the monthly chart. Okay, we see these cycles and these ranges for a long time, guys. This is weekly, monthly, daily charts. They don't change that often. The idea is that we want to see the price bouncing off of this place and going towards the top. And as long as this range is holding, monthly chart at the moment is suggesting bullish. Why? Because the last time we visited the high, then we visited the bottom. Now we're looking to visit the top once again, right? This is what we get from monthly. Then going down, just 1 second, open the window. Going down to the weekly chart, we see the bullish divergence right here. We see the cycle that we're working with. This is a triple cycle, forming a double bottom with bullish divergence, and then this flag looking channel consolidation kind of move here. After the breakout of this trend line, of this pattern, we said, okay, we're looking for possible continuations to the upside. Why? Because on the 1 hour chart, we got again the divergence. And this is when, do we have the 4 hour chart? This is when the 4 hour chart started forming convergence. Okay, it's not convergence per se because we are lacking the first part of the convergence in the rules, but it is a convergence principle, meaning we create higher highs and we create momentum while doing so. So our plan during the week was look for bullish setups during the pullbacks, and this is what we got up to here. Now continuation. To be honest, I do see, come on, I do see on the 4 hour chart this thing also. Okay, this pattern, and that means very short-term scalps sales could be happening from these levels. Now this is a new idea. This is a bit of advanced idea, but it could be done, especially if we get the false breaks on the very top. 15-minute or 5-minute chart, if the risk-reward ratio makes sense, we can be scalping here against the trend. And I repeat, this is against the trend, meaning very tiny risk, guys. Okay. Two ways, normal divergence. I'm not sure I get you. Are you talking about the last part here or something like that? If you're talking about the last part, then yeah, makes sense. It is correct. Normal divergence or a regular divergence. The other divergences are also normal. All right, moving on then. This one, I believe it's clear. We're looking for bullish setups, guys. Okay. Aussie dollar. Weekly chart. Continuation expected to the downside. And on the lower time frames, we can see why. The lack of divergence here and the breakout zone is still holding. There is a range which formed at the moment, and that's one straight push lower. And this is what we get on the lower time frames. We got the push up. Instead of double wave, I believe we're going to see a range here, even though I'm not excluding the idea for the double wave. So something like that. I have no issues with that, especially if we go ahead and reach the 61.8 once again. But bottom line is we do have a range right here. Okay, so anytime we visit this level or slightly higher where the 100% is, we want to be looking at possible sells. Aussie dollar remains bearish. CAD franc. Weekly channel, we bounced off of the top, creating lower highs here, and even though the momentum is not there, this is weekly. So yes, it might be decreasing the volumes and the volatility there, excuse me, but the chart not working fine. But on the lower time frames, we have plenty of room to look for these setups, guys. And the first thing we were looking for is this spike to look for the sells. Now, whether this is tradable or not, I'm not going to judge. I personally did not trade it because that was like majority of the pairs this week. They did provide us with this spike, and basically this is more or less not tradable. Okay, important part is if you manage to catch it, well done, admirations to you. But overall picture, not just this spike, overall picture in my opinion is that we're currently inside wave number 3, flat number 4 expected, meaning sell the top of the range aggressively. Okay, and then looking for wave number 5 as continuation lower. Of course, if we go ahead and look at the bigger picture, we have this range right here. More or less same idea, right? As we saw on the screenshot. I'm just using the most recent one, the most recent lows and highs. So there is plenty of room. And again, I'm saying if we manage to catch the sell at the very, very top around here, this is the zone, the risk reward ratio could be very sweet. I'm talking about 1 to 5 probably or so, depending on your actual entry. So cut franc is definitely one of the hottest opportunities. There are no divergences against us. There is nothing. We're currently trading inside this range, so lower time frames apply in this case. Ladies and gentlemen, am I going too fast, guys? If the pace is not fine, let me know, okay? Because what I'm talking about, it's perfectly clear to me. And if you have questions, go ahead, put your question in the questions box there. Okay, you have it in the software. And we're going to clarify those things. All right, perfect. Moving on. We covered what? Cut franc, euro yen. This is the cycle we're working with. It's currently developing. There are no divergence yet against, and we're trying to break, and I think we're going to manage and succeed in breaking this magnet zone, meaning we want to see continuation lower, meaning we want to see the next magnet zone right there, guys, and that's 113, let's say. Okay, a few pips difference there. So euro yen looks good. We have running sells, and again, there is nothing against at that stage. Not comparing it from here, of course, but from the most recent move. This is the current trend which is developing after the pullback. So this is what I'm working with. That one is from the higher time frames if we're going to measure it. And that means we want to see pullbacks, sells, pullbacks, sells, pullbacks, sells. Any pullback is an opportunity for us to look for the sells. Now, we have this situation, which again, in my opinion, is going to provide us with flat correction. So this spike, unfortunately, was empty spike without any setups, or at least nothing for me. Maybe some sort of I don't know, step trading or something, but I think you get the point on the lower time frames with these spikes. Bottom line is, once again, we're looking for flat consolidation pattern, sell the tops or sell the breakouts. If you have no clue how to sell the top or the breakout, how to validate breakouts and so on, please refer to the webinars. We have great webinar covering specifically this situation. Okay, so go to the media zone and just type range. I'm sure it will come up. Not sure about the exact name. Love ranges or something. Now it comes to mind. All right. Euro Kiwi, on the other hand, looks like a bullish continuation based on the facts, cycles, and price action. This one also starts to be a fantastic opportunity, in my opinion, because the hardest part, at least for me, is when we get the move. Okay, it's moving in some direction, and then the pullbacks start to form. Typically, we would have two kind of corrections. One type of correction is this one, which is actually moving the price in the opposite direction, commonly called ABCD or 1, 2, 3, 4, or double wave, or I don't know, 1,000 names there, doesn't matter. The other type, we can put them basically into categories. The other type of consolidation is the flat one. Now, this could be flag, this could be channel, this could be shrinking pattern, such as triangle or wedges of some sort, right? It's basically shrinking. There are two boundaries surrounding the price, and the price is trading in smaller and tinier, and you got the point, I believe. So once you get the move, there are some principles, especially in Elliot waves, which suggest the type of correction that we could be seeing, especially if this is number 4, wave number 4. But overall, people have difficulties predicting which way is going to go. And that's why it's good once you're patient and you start seeing the actual wave, the actual correction developing, then it becomes much easier for us to decide what has to be done and how it has to be done. Back to Euro Kiwi, and you'll see what I mean. This is how the chart started to develop. We have triple double on weekly and daily charts. Same structure within each other. And now to the interesting part and the actions. That's the 4-hour chart. On the first push lower, all we see is hidden divergences. But this push lower is somehow coming in one wave. So it's not ABCD, it's not flat correction. Trading those is tough. Okay, that's why, how should we say that? I don't know, patience is the only thing that comes to mind. Wait for the specific structure to be formed, and then it's much easier, guys. Otherwise, the guessing starts. And when you guess, usually it doesn't end well. Now, we see that there are already two waves, so that could be double wave correction. And we start following the divergence, which starts to make sense again. And we can also fit, in my opinion, and now there are different tricks to do so, to do that, but we can also fit some kind of shrinking pattern here as well, which looks suspiciously as descending triangle, which is coming in bullish trend, so it becomes a bit weird, but bottom line is we start to get an idea what's happening. So now the bullish continuation makes much more sense. Okay, and it's much easier to read the chart, which is the bottom line, because we need to pull the trigger at some point. Another thing which you see we almost forgot to come to the live chart is this zone. Slightly above or below, doesn't matter. This zone, in my opinion, now I'm not able to select it, of course, is a very, very good key level, guys. And I do suggest you to pay attention to this one. So first of all, we have the spikes and the very top, the extreme zone, which is right here. And we broke and closed above it, and the price is more or less holding around this zone. It's not giving us immediate reaction to the downside. But if this double wave starts developing further, okay, something like this, we can see that the 100%, basically if we get that, the 100% comes precisely to this zone. Surprise, surprise. Trust me guys, I did not put the Fibo there before that. It's all about price action and density of the spots to the same level, attached to the same level. I mean, look at that. This is screaming, draw a line here. Same thing is happening right here. Okay, so again, even if you don't know how to use Fibonacci, you're still confused which high to use, which low to use, etc., etc. You can go ahead and draw levels manually. It's really not that complex, but it's absolutely amazing and super accurate. Okay, just look for the highest density of points. Wherever the price stopped the most, this is a level. And of course the extremes, the spikes, those are also loaded. So you can see it fits absolutely perfect, which means aggressive entries once again this time will be from the bottom, and conservative entries will be coming with the breakout to the upside. Bottom line, in summary, Euro Kiwi bullish. I love this pattern along with cat franc, not pattern, setup idea. These two should be providing us with some nice opportunities, in my opinion, next week. Now, pound Q and pound dollar, they're both long-term ideas based on weekly, daily charts. Triple, double, looking for continuation. And we have the bullish divergence to confirm the end of this double bottom here. That's weekly chart. Then we drop to the daily chart, where we have the one leg divergence right here plus convergence, which means buy pullbacks. And for me, this is the reversal. For me, it's very simple, because in this case, the trend line is absolutely precise. You know, I love trend lines when it comes to using them as levels. That means any pullback closer to this trend line, of course, confirmed with the reversal that we're looking for, is opportunity for us to look for buys, as long as this thing is holding. Buys or add-ons to your ongoing buys. There is no reason, if you already made some profits, let's say you attacked here, or I don't know, something like that, and then the price does that, you get the setup here, and you expect it to continue higher, and your risk reward still makes sense towards this zone. Why not attack it second time? This one is still running. Most likely stop loss is put to break even, risk-free trade. You probably cashed out some amount already. So this add-on could be basically free trade, or in the worst case would be almost free trade. Why? Say that you're risking 1% right here, and then next setup appears, but before that you manage to cash out, to make it simple, 1-to-1 risk reward ratio, and you cashed out 80%, which means 0.8 is in the pocket. This is profit. Okay, now when the price comes here, again you open 1% or 0.5%. To make it clearer, we're going to use 1% once again. This trade fails, but with the previous trade you're actually losing 0.2, because this is the same cycle, the same direction, the same setup, if we can put it this way, that the bigger picture is the same, and you're attacking inside this bigger picture 1, 2, 3, 5 times. Some trends, especially when speaking about pound Kiwi, euro Kiwi, euro Aussie, you know, the guys that move a lot. By guys I mean pairs and instruments. This is where you can have add-ons like 5 times, guys. Okay, no one is saying buy once and that's all. So this kind of approach is good because even if it's only psychological trick, it's easier for you to open a new trade because this one is already in the pocket. It is a realized profit, it's not floating. The rest of the trade is break even, so nothing can hurt you there. And the only exposure is here. Think about this one, it's kind of nice approach for a larger trends, especially when you're working with weekly cycles, for example, or indices, stocks, things that tend to move, oil, gold, the commodities, because in reality, Forex pairs are more or less trending inside ranges. Those ranges could be thousands of pips, but they do trade inside these ranges. While stocks and commodities, for example, or indices, they move, they create new highs all the time, and so on and so forth. So in these examples here, we can have multiple add-ons when those appear, and those could be risk-free based on the previous floating profits, for example, or closed profits. All right, back to the charts and a report. Cable, looking for this continuation lower, and one of the most important things, in my opinion, here is the fact that we're trying to break this divergence. We already managed to break it on the first one and trying to break it on the second one. Price action wise, previous weekly candle closed below 61.8 of this measurement. Now we're very close to this zone, and this is where things become tricky, because technically speaking, this is divergence. Okay, the question is whether this thing is ready to push up or not. Of course, with the pounds we have fundamentals and so on and so on, so tricky indeed, but in the very short term, and this is what we're trading, in my opinion, we should be sticking to the sells. We had previously the invalidation zone right there. Bottom line is this is the critical level that must hold. This is the 61.8, and again, even without looking anything else, price action is telling us that's a massive critical level. If this level is broken, okay, and cleared, and it breaks above and continue higher, of course, we are not looking for sales anymore. Okay, but until that happens, sell, sell, sell. All right, that's about cable. Kiwi. This one is a bit tricky, guys. At least in my opinion, we have a few tricky parts here. First of all, we can't say this is an impulsive move. Okay, the rules don't apply. Second of all, we somehow lack the momentum which we should be seeing if that was an impulsive move in leg number 5 here, right? Based on the Fibos, however, we have a level slightly lower, and with this part I do agree. This is the daily chart, which is also suggesting continuation lower, and that's the 4-hour chart, which also confirms the continuation lower. In other words, the shorter term time frames are telling us bearish. Mid to long term, which is daily and weekly for me, it's not that clear, to be honest. Those are Vladimir's analysis, not mine. However, the clarity for me comes from monthly chart. So very short term bearish, and the very long term also bearish. Why? Because this is double top, breakout of this double top. We're looking for continuation. That was the retest, and now we move lower. On the other hand, we also have this kind of structure developing. So what happened here is not entirely clear to me what and how to label those, but the bigger picture makes sense, and that bigger picture is saying we should be going towards 0.59. Okay, so this is how we can basically fit the idea. Of course, for our chart doesn't go along with the month, but month is giving us the overview of how these things should be happening. So we're stuck here inside this one candle, one huge candle, expecting flat consolidation and continuation down. Kiwi dollar bearish. Dollar cut channel, okay, and what is looking for bullish continuation. Now this is one of the pairs where we have slightly different opinions, and actually not different opinions, we're just looking to trade bold. Now since this thing started moving right here and it broke and it created the pattern that he was looking for, which was the triple, this one which we call 3+2, he started looking for the buys, and that's absolutely correct. Okay, that makes a lot of sense. The problem for me was the divergences against that are coming here along with the daily divergence. In other words, we're expecting bullish moves since here, okay, but those bullish moves are going against the higher time frame divergence, which means it's valid but more aggressive. Okay, I just want to make sure everyone understands the differences and why we have two different opinions, or basically our opinions are the same, just not trading it the same, if we can put it this way. So the idea is, as long as this thing is holding the bullish momentum and there are no reversals, it remains bullish. Okay, during the week we had these drops, false break here with the spike, divergences, and again back to the upside. And in my opinion, we do remain bearish on daily chart. This is why I do remain bearish. Furthermore, when we look closer at the drawing of these trend lines, daily chart, I mean, when you look at it on weekly, it looks like this thing is reached, right? But when you drop the levels precisely, then there is a slight difference here. And this is exactly why I still prefer to look for the sells, because daily chart did not yet create anything confirming it, and the hidden divergences are still there. So this, in my opinion, was supposed to be a correction. That's the whole idea here. Then what do we have, guys? Let's see. Dorian, final forex pair, and then we move on to the other guys. Dorian, developing 3+2. Okay, same idea but vice versa. Trendline breakouts, divergences, we move lower. To make long story short, we are looking for sells, guys. We're very close to the bottom of the weekly range, but that was not yet reached. And on daily chart, we still don't have any confirmation for the reversals. The only thing we did call this week was the possible bullish correction or reversal. We don't know yet, but as long as this zone is holding right here, we remain under bearish pressure. So once again, if this level holds, that entire zone here holds, Sales towards 104.50 is a possibility. If it breaks and we got the breakout, confirmed breakout, then no mas, we invalidated. Indices, very quickly, they're pretty much the same setups, but after the false breaks, we wanted to see sells. And now going to the 4-hour chart, this is what happened this week, guys. False break, this could be read as 3 or 2. I personally do read it like that. And bottom line is we got the divergence, we got the breakout. As long as this high is holding, this is supposed to continue lower. So basically that's the stop loss or the invalidation here, right? For the short-term pattern, of course. The longer-term idea is right there. So by saying this is supposed to hold, I'm referring to the 4-hour chart setup, which is this one. So we still remain bearish, but if this level is broken after the reversal pattern, then we need to wait, because we could be still under bearish pressure, but we don't have a setup there. Okay? And absolutely the same idea happening on the other one, so no need to cover it. Then we have natural gas. Oh, this one is not opening. Beauty phones. Anyway, let's stick to daily chart. Daily and 4-hour charts, guys. We're looking for trend line breakout, and we did get this trend line breakout, and there is divergence on the weekly chart, so bullish continuation would make sense here. However, the 4-hour chart, I would wait, if you want to be more conservative, for the break of this high. So basically something like that, pullbacks and then buys. Why? Because when we look at the price action, that was impulsive move. We can agree here, I guess. That was impulsive move. This thing right here is not. And that's why I'm saying you can be counting 3 highs, 3 lows, and so on and so forth. Price action, for me, it's not there. So only break above this high will make validation for possible buys. Okay. And do we have anything else? The stocks, Adidas, Louis Vuitton, basically nothing interesting. We're running the buys, no major updates. The price was stuck here for basically a week. Okay, few candles there. Look like nothing. In reality, it's a whole week. This one moved a bit, of course, but still holding the previous low. So no major changes around these two. Any chance to go into Euro Pound and Aussie Franc? Aussie Franc, not really, Gerard. Euro Pound, I can comment. This one was on my trade list during the week. And this is what I see, my friend. Ascending triangle coming after bullish move. That means we are looking at bullish continuations. And look how perfect the FIBO level strikes the spike here. Okay, it's by the pip on monthly chart. Now there were two scenarios that we follow here. Scenario number one is always the bounce, which means we look for another push lower and then the breakout of this level. But overall, monthly chart, we're looking for bullish continuation here. On the lower time frames, we said that we want to confirm the possible reversal to the downside. There are many factors which were putting warning signs here and there, as the close above this spike, for example. But we were following for this specific thing. Okay, rising wedge, overthrow, I believe is the term, or in our language, false break on the last part, second divergence, and this is where we got the close below. Of course, pullbacks here required because otherwise the target would not be there. After the breakout here, yesterday during the live room, we said that this thing becomes aggressive. I'll just remove this line for a second. Because it got stuck, it was somewhere around here. It got stuck inside this range and it failed to gain the momentum, even though it gave us the confirmation that it will be moving lower. So this is where we said it would be best to either cut the trade in half, or move the stop loss to break even, or if the entry is too close, move it to the next available resistance, which means if the stop loss is here, move it here or here. Basically lower the exposure. That was the whole idea. Lower the exposure because it's not gaining the momentum. And that's pretty much the management part. Besides that, I think we covered already the setup. It bounced, we got the breakout, and that means bearish. Now I do see impulsive move here, which means possible continuation to the downside. Even on the 1 hour chart, we are getting ideas for continuation. So I think we're going to see overall and very likely at least some deeper correction. That could be up to here, or it could be towards the bottom, and then the longer term turns bullish. I hope that covers it, my friend. Money, oil, no, not on my list, sorry, I have nothing there this week. Can we look at your Aussie? Ahmed, same story. Not really on my list. We can look at it though, but it was not the clear setup. We mentioned in the Delta group, I believe it was, we were commenting with a few members about this zone to be broken for conservative sales, and this is happening now. But overall here, it's not very clear to me, to be honest. I can't give suggestions, I'm sorry, for this one. Money, just covered, mate. All right, any other questions? Anything you'd like to discuss? All right then. Ladies and gentlemen, wishing you absolutely amazing weekend. Go enjoy. Summer is almost over, so last sunny days. Money, as I said, oil, I don't have a view there. It's neutral for me. I'm not trading it at the moment, so I really can't give you anything. Okay? Thank you, Gerard. All right, guys. Bye for now.